What if I told you your bank treats you completely differently depending on how much money you have? At -$4, you can get hit with a $35 overdraft fee. At $2,000, they start offering you credit cards. At $15,000, suddenly someone from the bank wants to personally call you. And at $5 million, the bank may send someone to you. Same person, same bank, completely different treatment. So let's follow one person, Alex, and see exactly what changes. Level 1. -$4. Alex checks his bank account and sees the number sitting there with a minus sign in front of it. -$4. It sounds insignificant, but the bank doesn't care that the mistake was only $4. The system cares that the account went negative. And suddenly, a $35 overdraft fee appears. Now that $4 mistake has cost Alex $39. Then another charge hits. A subscription he completely forgot about. $7. The account is already negative, so another fee gets added. Now Alex doesn't owe $4, he owes $77. And this is where the problem gets bigger. His rent payment goes through, except it doesn't. The payment bounces. His landlord charges a late fee. His phone bill gets returned too, another fee. What started as $4 has now turned into hundreds of dollars of financial damage. Alex isn't buying anything extravagant. He isn't gambling. He isn't taking expensive vacations. He's simply one small mistake away from a much bigger problem. And that's one of the cruelest parts of being financially fragile. A small mistake can become incredibly expensive. Now Alex has to fix the damage. So he picks up extra hours at work. He cuts spending. He skips things he normally enjoys. And slowly, he gets the account back above zero. But getting back to zero doesn't mean the system suddenly starts treating you differently. Because Alex has just reached level 2. $200. Level 2. $200. Alex finally gets his account back into positive territory. It took overtime. It took cutting expenses. And it took saying no to things he actually wanted. But he did it. $200 sitting in the account. For the first time in a while, Alex feels like he can breathe. Then the bank charges him $12, a monthly maintenance fee. He checks the account again. The money is disappearing simply because he doesn't have enough money. The bank requires a minimum balance of $1,500 to avoid the fee. Alex has $200, so the fee stays. And this is where the system starts to feel strange. The less money you have, the more expensive it can become to keep that money in the bank. Alex decides he needs access to credit, so he applies for a credit card. The bank doesn't offer him a normal card. Instead, he's offered a secured credit card. He has to put down $300 of his own money as collateral. Then the bank will give him a credit line and charge interest if he carries a balance. Alex looks at the offer twice. He's basically being asked to prove he can handle credit before the bank will trust him with credit. So he doesn't take it. Then a few weeks later, his car tire blows out, a completely normal expense. But Alex doesn't have an emergency fund large enough to absorb it. He can't simply put the repair on a credit card. So he takes the bus to work. It takes hours. He's late. His manager doesn't fire him, but Alex can tell the situation is starting to affect how people see him. And then he walks into the bank to ask about the maintenance fee. The customer before him is getting a friendly conversation. The teller is smiling, asking questions, making small talk. Then Alex reaches the counter. The smile becomes professional. The conversation becomes short. His request is processed quickly. No extra questions, no personal attention. Alex wasn't insulted. He wasn't refused. Something more subtle happened. He was simply treated like a transaction. And that's when Alex realizes something. At $200, the bank doesn't see him as valuable. He exists in their system, but he doesn't exist in their attention. Then Alex makes another change. He stops trying to survive month to month and starts trying to build a real financial cushion. He saves every extra dollar he can. He keeps his spending under control. He builds his emergency fund. And eventually, Alex reaches $2,000. That's when something interesting happens. The bank's behavior begins to change. At $2,000, Alex hasn't become rich, not even close. But for the first time, the bank starts seeing him differently.
Level 3, $2,000. Alex still isn't rich, but something has changed. His paycheck arrives every 2 weeks, $1,600 after taxes. And for the first time, that income is consistent enough for the bank's system to notice. Then something strange happens. The monthly maintenance fee disappears. Alex didn't call, he didn't negotiate, he didn't ask for a waiver. The system simply sees his direct deposit and automatically removes the fee. The same fee that used to quietly drain his account is suddenly gone. And Alex starts noticing something else. Credit card offers begin showing up. Not secured cards anymore. Real credit cards. $2,000 limits. Pre-approved offers. The same bank that wouldn't trust him with normal credit months ago is now inviting him to borrow money. Alex applies. Approved. 90 seconds. That notification feels strangely satisfying, not because he needs the credit, but because he remembers being denied. The number changed, and suddenly the bank changed with it. Then Alex needs $5,000 for an unexpected car repair. This time he applies for a small personal loan. He's approved. The interest rate isn't amazing, but it's dramatically better than what someone with weaker finances might receive. And that's when Alex understands something important. The bank isn't really asking, is Alex a good person? It's asking, does Alex look like someone who can repay us? His income is consistent. His account stays positive. His deposits are predictable. His financial behavior looks less risky. So the bank is willing to offer him more. Alex hasn't suddenly become more responsible overnight. The system simply has more evidence. Now Alex reaches $15,000. And this is where the difference becomes even more obvious. His credit limit increases. He receives better offers. And then one morning, his phone rings. It's not an automated message. It's an actual person from the bank, a relationship banker. The banker introduces himself and gives Alex a direct phone number. He wants to talk about Alex's financial goals, his savings, his future, his plans. Think about that for a second. A few years earlier, Alex was sitting on hold trying to get a $35 fee reversed. Now the bank is calling him first, and that tells Alex something. The bank didn't suddenly become nicer. Alex became more valuable to the bank. The incentives changed, and when the incentives change, the experience changes with them. But $15,000 is still nowhere near the top. Because once Alex reaches $80,000, the relationship changes again. This time, the bank doesn't just want to sell him something, it wants to keep him.